Hello everybody, welcome to this week's live stream. It looks a bit quieter than usual. I'm guessing that people are on holiday. We had the payrolls an hour ago, didn't we? And the expectation was 250,000 jobs added in the US economy in July. And it actually came in at 528,000 jobs. So a massive beat on the payrolls numbers. Bit of volatility, quite a bit of volatility going on actually. This is the dollar. Hands up if you bought the dollar this morning. Yes, I did. So absolutely, crazy move in the US dollar. We'll see if it carries on. I'll go through the reasons why I bought this. If you watched a few of these, I'm a big fan of the dollar index anyway. And I did wonder over the last couple of days, was it breaking out the downtrend? So I bought it this morning because it held above yesterday's low. Wasn't really expecting that to happen like today. But yeah, let's see if it carries on this trend. We'll have a look at this in a sec. Let's get the housekeeping out of the way. Let's get the risk warning done. This presentation is only for educational purposes. This presentation does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.9% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay. A couple of interesting things next week. I've not got loads in, but Wednesday's a big day. China inflation. I'm guessing that's the early hours of the morning. Then US inflation in the UK afternoon time. So big focus, I think, next Wednesday, because clearly inflation is the big thing at the moment. Interest rates inflation has been all year. Bank of England put base rates up by 50 basis points on Thursday. And then next Friday, we've got UK GDP. So the latest UK economic figures. So that'd be interesting. See how the UK economy is doing. As usual, to find out more about the company, go to Capital.com. Any questions, drop me an email, david.jones@capital.com. At Jones the Markets on Twitter, jonesthemarkets.com, which I think takes you to my Facebook page. Find out a bit more about me and the training course that I run for trading. And of course, follow Capital.com on YouTube, Twitter and Facebook. Right, that's it. Let's get into it. So a lot of volatility because of these payrolls, massive number compared to expectations, more than double expectations, came out in the last hour. I must admit, when it comes to markets at the moment, we've been doing these the YouTube videos and the live stream for a long time now, a few years now. The second half of 2020, all of 2021, I found much easier trading than this year has been for me. And I was thinking just before the live stream, with a lot of markets at the moment, I'm quite confused. I think the only markets I have really firm opinions on, the dollar index, the oil and gold this week, to be honest. And everything else, we'll get into it more when we look at stuff. The bounce back we've seen in stock markets. The Nasdaq's bounced 20% in under the last couple of months. And the question is, are we going to see further recovery from here? So it's interesting, but perhaps not that clear, I don't think, at the moment. Not for me, anyway. Anyway, let's start off with the dollar. So the dollar, I've said this before, I'm a big fan of the US dollar index. Probably the US dollar index and the S&P are my two favourite markets. The US dollar index has had this great trend since May. Traded it, and I've usually got an open position in the dollar anyway. I've got a longer term open position in the dollar. I put the short term trade on today in the dollar, and we've just got trends all over the place. Clearly the dollar has accelerated this year. The high so far for the dollar index is 109 from July. It's been backing off since then. I've been waiting to buy, and I bought it this morning just because of what was going on with the hourly charts. That I thought, okay, the trend has been down, and you could probably argue actually that trend is still down if you took it off the 109 high. Maybe not actually. And then what I thought, because on the 3rd of August, so 2 days ago, it broke out through some big levels from before. I thought, right, I'm going to buy a pullback. And I just happened to log on this morning about 9 o'clock and thought, well, this looks like a good area to buy. Stop down here somewhere, and of course it's gone a bit crazy because of the payrolls. But for me, even if it backs off from here, I'm happy to stick with the position and see if we see further recovery next week in the US dollar. We'll see what happens. And the payrolls, if you look at the dollar reaction, the fact that, I'm guessing, but the fact we've had stronger than expected employment numbers suggests that the US economy is perhaps stronger than people are expecting, which perhaps will give the Federal Reserve, make them a bit more relaxed about continuing to raise rates, and continually raising rates will be good for the dollar, usually. So even though absolutely the US dollar is overstretched to the upside, we've moved away from this long-term uptrend that started in May of last year, accelerated from February, and we can see we're way away from this longer-term uptrend. I think it's too early to call for the end of the dollar trend. Let's see what next week brings, but a big move on the payrolls today. And I see someone's just said, and someone's answered, yeah, DXY is the dollar index. The reason I like the dollar index, clearly there are lots of currency pairs you can trade, but the dollar, if you're going to trade the dollar, for me, you can see the description down here, the dollar index serves as a benchmark for measuring the relative value of the American dollar to a basket of currencies. So it's against the euro, the yen, the pound, sterling, Canadian dollar, Swedish krona, Swiss franc, Yeah, so it's the dollar against the basket. So it's like a smoothed out currency market, which is why I'm a big fan of the DXY, the dollar index. So that's the dollar. Interesting to see what happens. Can it hang on to those gains? I think it probably can't for today, but it'll be interesting to see what happens next week. If we look at the pound against the dollar, look at that. Pound got slammed again. Great short. The old Harry Hindsight trade. It had a little poke through the downtrend. Clearly it's got slammed on the payrolls today because the dollar's come back. A little poke. That would have been such a good short, that would. Poke up through the uptrend, sold off. I do wonder if maybe we'll see a bit of a pound bounce back next week. But for me, the trend for the pound absolutely still down. From this year, isn't it? But we could go back to May of last year. But the trend for this year since Feb has been down. So from a medium term point of view, I'd still rather be a seller of the pound. From a short term point of view, an aggressive trade today, if you fancied it, and it's up to you. But it's to take the view, this reaction by the US dollar has been overdone, and be a buyer of the pound down here at 120.33, stop below 120, maybe. Could be interesting if we see some of these US dollar gains given back this afternoon. But overall, that pound trend is still down. If you look at euro dollar, that you can see again, obviously slammed on the payrolls because of the dollar strength. But I'm guessing, look at that. Still boring, isn't it? We've had now about 3 weeks of this. This is the daily chart. 3 weeks of not very much. Big trend still down. Everybody and his dog does seem to be bearish the US dollar. So that does make me think, well, have we maybe seen a bottom for the US dollar? For the euro against the dollar? Let's see what happens. See what happens down here. It briefly blipped through parity, blipped through one. Didn't get any follow through. Big trend is still down, so maybe the story for the rest of the year we see a base build for the euro against the dollar. Who knows? But I've got at the moment not much interest in trading the euro down here. So that's euro dollar, pound against dollar, dollar yen. Dollar yen is going to look a little bit like the dollar index, I'm going to guess. There we go. So it came off its highs, 139, traded down to near 130, and again, of course, we've seen it bounce back over the last few days. So I do think we'll see. My target for dollar yen would be for a run back up to those highs, because for me that trend is still up. Let's see what happens. But an interesting move today on those payrolls. Let's see where we go from there. So look at stock markets. The reaction for stock markets is, it was off a lot initially. I don't know if how they're doing it now. Yeah, that was the reaction. So this is the S&P 500. This is a 5-minute chart of the S&P. So payrolls come out 1:30 UK time. Market gets slammed. So it goes from 41.60 down to 41.04. So it's a chunky old move. Clearly you can see it's clawing some of it back now. But again, this is an understandable reaction because going back to the reason for US dollar strength, further interest rate rises would not be viewed as good for the US stock market, but it's clawed back about half of those losses already. So let's see, the US stocks continue to move higher. I'm in this account, I'm short the S&P because the level I'm watching, it's the same level I was talking about last week. For me, I think, for my trading anyway, I think this is a really important level. 4,200 or thereabouts on the S&P. If it can break through here, I would start to think that perhaps we've seen the worst for the year. Perhaps the trend is over for the year. There have been good rallies along the way for the S&P, but it is ultimately down on the year. But I think if it can break 42 properly, then perhaps we go back to buying the dips rather than selling rallies. But if I had to do a trade on the S&P up here, I would absolutely go short. No question for me. I'd be short up here. So short wherever it is now, 41.24, with a stop above 42.10 or something. Good risk reward up here if the rally does run out of steam. For fans of the RSI, pretty overbought up here. It's the most overbought we've been this year, actually. The last time the only one time the S&P has been overbought this year was there in March, and we're overbought again. I mean, I talk about RSIs. I don't use them on my own trading. We talk about them on the videos because I know people like oscillators. Personally, I never look at oscillators, but if you look at oscillators, then the RSI is overbought. So that's the S&P. Interesting week next week. I'll be looking for it to sell off, but it's been a strong run in that market. Same for the old the Nasdaq, right back to the trend line. Look at that. So let's take that line off for now. So there's the trend since December of last year. Let's see what happens up here. There's the recovery route though, from 11,000 to 13,000. So we've seen a $2,000 rally, 2,000 point rally. Sorry, in the Nasdaq. For me, I would go short on Monday, assuming it doesn't blast higher today. I think it's another interesting market for next week. Does the trend hold on the Nasdaq? And this is why, for me, it is all quite confusing at the moment for the way I trade anyway. Because the question is, we've got big trends in place this year, but we've had good trends over the last few months going against those big trends. So are we seeing a turn? Who knows? Wait and see what the market does. But I think that's quite an interesting move today. If that S&P, not that S&P, the Nasdaq, if it ends around here today, then that's a bearish engulfing candlestick as well for those of you who are fans of the candles. Yeah, interesting week next week. But like I say, the short-term trends are up, but I'm looking to see if these markets are going to roll over. FTSE, same old for the FTSE, doing its own thing a little bit, in the middle of the range for the year, pretty much, I suppose. You can see the range for the year, can't you? I mean, like I never trade the FTSE, but it's held up better, of course, than the more risky focused S&P and definitely risky focused Nasdaq. I don't really have an opinion on the FTSE, to be honest, but it's in the middle. Nikkei, if you look at that, Japan. What would you do in the Nikkei? I mean, again, I would be tempted to go short the Nikkei. I'd take the view, okay, it has the downtrend has definitely slowed. It'd been in a downtrend since September last year, and it's trying to break out of it. But 28.8, 28.6 to 28.8 looks to be a bit of a problem. So let's see what happens. Let's see if that rolls over. So I think it is going to be an interesting week for stock markets next week. Bounce or bust time, or breakout or bust time. So let's see what happens. The other market that I do have a firm opinion on is gold. I did the gold video yesterday. So the gold video is on our channel. What was interesting, just about the whole sentiment stuff, because the fact is, most people are wrong on markets. So whenever I do a video and I put a trade on and everyone says, oh yeah, I really agree with that trade, I think, well, that trade definitely isn't going to work out then, is it? Because everyone agrees with it, so everyone's going to be wrong. And yesterday, we put the gold video up yesterday, and there were quite a few comments saying, I don't know why you're going short gold. China's doing this and that and the other. So I went short yesterday in the gold video, and I think the trade is up. Where's it up? It's up a little bit. So I sold it at 1781. The market's 1771. And I just wondered, medium to longer term, quite bullish on gold. We're buying the dips. But, this downtrend we've been in on gold since March is still there. Coming off from 2070 down to wherever we are now, 1771. So my target on that trade is, if the trend is going to continue, is a run back to the lows from July, 1680 lows. That's my target. So we'll see what happens with that. I mean, but then the reason why I think actually it could be interesting for a buy for the rest of the year, it's such a big level, this 1680, 1660, 1680 level. It's been the lows for gold since April 2020, pretty much. So it's a 2-year low for gold. You can see it spiked down last year in the flash crash last year in gold. So I think those lows are interesting, but for me, that March trend is absolutely still down. So it's an interesting market, and I am short, quite happy with that short, particularly if the dollar strength continues next week. Let's see how it turns out. Let's have a look at silver, the market, my absolute least favourite market. I haven't traded it myself for more than a year. Because it does this, because it breaks out and looks like it's going to reverse the trend, then it has second thoughts and just dumps. So for me, I was short silver, came out of that silver short, I think. I don't think I'm short silver anymore in this account. No, so I got no trades on silver. What would you do? What would I do on silver? I'd probably go short on silver, but I find it quite a frustrating market to trade. But for me, it made a low about $18 in July. That was the lowest it's been since July 2020, 2-year low. We've seen a bounce off that low, back above 20. I would say, for me, the risk is it's going to go back to 18. And the risk is if 18 breaks, we could go back to maybe 16. But I really find it quite a scrappy market to trade silver. So I don't trade it that much. So that's gold and silver done. Oil. Now, oil isn't. So I would I would buy oil now, but I'd be a bit patient because it has today just slipped to its lowest levels since February. I think it's February. Yeah, February this year. So we're on a 6-month low, actually. 6-month low for oil today. So I need to adjust that trend line. So there was that OPEC meeting this week where OPEC have agreed to increase production, but only by 100,000 barrels per day, apparently. And 100,000 barrels per day in the world of oil is not very much at all. But if anybody wants to send me 100,000 barrels there, I'd be quite happy with that. But, so it's nothing. But the worry is about the economy, again, for oil. I'm guessing oil must have gone up on those payrolls. It's just been a bit all over the place. But I do wonder, because again, going back to that big trend, that's the big trend from April on oil. We're back to the big trend. So I think it's interesting. I wouldn't be in a rush to buy today, but I think it's an interesting market to watch over the next couple of weeks to see if it makes a base down here ahead of that trend line. We see it turn round. I think, like I've said before, I don't think oil is going to be troubling $126, the highs for the year, anytime soon. So, but an interesting market to watch because we're back down to that big trend. So I'd be looking to see if it can turn around. Very oversold on the RSI, for those of you who are fans of that. Been bumping around this oversold level for about 5 or 6 weeks now. So interesting one to watch down here. Let's see what happens. Does it make a break? A base, rather. And if it doesn't make a base, I think the risk is we maybe slips back to the sort of 60 to 70 zone from here. But I'd be looking to see if it does make a bit of a base down here. Let's see what happens. Right, we've done that. Let's have a look at Bitcoin. I haven't looked at Bitcoin at all this week. I've got no idea where that is. And it is pretty much where it was a week ago. So nothing. For me, on Bitcoin's nothing changed. Perhaps we've seen a base down here. The big trend is down. It gets a bit more interesting if we can break out of this trend. It is absolutely staging a bit of a recovery, isn't it? If we go on the hourly chart, I'm sure we'll see some sort of trend on the hourly chart on Bitcoin. There we go. Quite a nice little trend chugging away on Bitcoin. So short term still up. So for me, perhaps target would be a run back to 24,500. But medium term or longer term, whatever you want to call it, the big trend still down from those all-time highs last year. That's it. I think, have we done everything? I think we've done everything. I'll jump into the questions in a second. So for me, just to recap, I think for me probably the most interesting markets to watch next week are going to be stock markets. Just to see what happens up here. You know, we're back at the big hurdle for the S&P, back at the big hurdle for the Nasdaq. Is this recovery different to all the other recoveries we've seen this year and the markets actually blast through? Or do we see what we've seen all this year, ultimately recoveries run out of steam? So I think it's going to be an interesting week this week, and that's it. And the other one is the old favourite, of course, the dollar index. Is today's move the start of a bigger recovery in the dollar index that goes on to target the old highs up at 109? And they were only the old highs from 3 weeks ago. Let's not forget. You know, this has been a pretty incredible market, the dollar index, when it comes to buying dips over the last 15, 16 months or so. So dollar and stock indices, US stock indices, the markets to watch for me. Oh, natural gas. Someone just mentioned natural gas. I forgot about that. Let's have a look at natural gas. Then we'll get into the questions. I did a video on that this week. You can see here I've got 2 orders in on natural gas that haven't been filled. There was an order from, we did a video beginning of July. I was trying to buy a dip. I had an order in to buy 6.5, didn't get filled. And I did a video this week on natural gas trying to sell short at 8.5, and that didn't get filled either. The market got as high as 8.47. Just missed that. So I did wonder in the video I did this week, I think it was this week, absolutely the trend for natural gas is up, but very much a market driven by what's going on, you know, geopolitically and all of that. And I did wonder in the video I did, and then maybe I mentioned it last week, the fact that it spiked up but hadn't taken out these old highs. Were we seeing a bit of a top forming for natural gas? You know, because you can see how much time it spent sort of 8.5 to 9.6 in May and June. So have we seen? I think we have. I'm going to say it. There you go. I think we've seen a top for natural gas, despite all the shenanigans still going on in the energy market. Big trend still up, but I do wonder if we see a bit of pressure on the gas price from here, which would be good, of course, for the inflation numbers and everyone else. Good, of course, for the older heating bills in the winter. But we'll see what happens in natural gas. But I don't know. Someone asked the question, why did it spike so much in the American session on Tuesday? Don't know what that was all about on Tuesday. Where was it? Here? What was the date on Tuesday? I've got to go back a bit further. Oh, here, wasn't it? No idea. But that was, you're right, that's a big old move, isn't it? But that is natural gas. That's how it moves, natural gas. You know, it sort of drifts and then it has these weird, really sharp moves. I'm guessing, of course, driven by news. So yeah. But I wonder if perhaps we've seen an important short to medium term top. Right, let's have a quick look at the questions. Someone said, first question of the day, XLE, which was one from last week, wasn't it? The old energy spider tracker. So the S&P, it tracks the energy sector of the S&P, exchange traded fund. I would, what did I say last week? Did I say I'd be a buyer? I think I would be a buyer. And the only question is, where do you buy? Where would you buy? So I would be patient. So I would, wouldn't buy it today, even though it's had a strong turnaround today. But I would absolutely, for me, from the trend point of view, be a buyer. I think the aggressive trade for me would perhaps be a buyer on Monday, and the stop loss, the absolute closest I bought my stop loss on this one would be below that 14th of July low, which is at 65.40. So I think it's interesting. The more patient person may wait to see, do we get a bit of a deeper sell-off back to the trend line? But for me, the trend, we've only got data going back, well, it's going back a year and a half or so, 20 months or so. So I would be a buyer on dips of this one, the XLE for me. Can we have a look at Rolls-Royce? Why does it not move much? Because, I don't know, maybe it's just boring. So this is Rolls-Royce Engineering, of course, not to be confused with Rolls-Royce cars. Rolls-Royce cars are owned by BMW. Rolls-Royce, the listed company, is Rolls-Royce Engineering, which makes the engines for aeroplanes and stuff. The reason it doesn't move very much is because it's not a very good stock. You know, Rolls-Royce has been an absolute nightmare, hasn't it, over the years. So 2018, it was trading at 11 quid, and today it's 83 pence. It's just boring. It's just dull to me. Dull as dishwater, Rolls-Royce. Me, would not touch it with a barge pole. I suppose you could make the argument it's at the bottom of the range. This is pretty much the 2-year range, isn't it? Or the 18-month and a bit range. So you could make the argument for being a buyer at 83 and see what happens, but I've got no interest. I mean, actually, if it hit the top of the range, that is it doubling, isn't it? So the range is pretty volatile, but you know, I'm not a fan of charts that look like that, where you've got to use a magnifying glass to see what's been going on over the last few months. But it is at the bottom of the range, but pretty uneventful. You're right, over the last couple of months or so. Not one for me, but maybe one for those who love a bit of bottom fishing and risk. Could we have a look at Swiss yen? We had a look at gold, didn't we? But we'll have a look at Swiss yen. Chuff against the yen. Here we go. I would be a buyer. I think we have looked at this before, haven't we? So the trend for the Swiss franc against the yen is up. And again, it's accelerated away since September last year. I'd be a buyer. I think it's quite let's do this trade, actually. This could be an interesting trade. For me, an aggressive stop would be underneath that low, right? Because if we're going to really see Swiss yen get a move on, it shouldn't take out that low. What was that low? 137.14. Let's go 136.5 for a stop. Okay, so 136.5 for a stop. We normally risk 100 quid on these live stream trades. How much is that going to be? Oh god, my maths is completely off today. So a lot less than that. 45. Oh, there we go. We're going to buy 4. Oh, it's too small. Oh, I'm going to buy 4 grand or 5 grand. Okay, I'll buy 4 grand. 4 grand. So we're going to buy 4,000 of Swiss against the yen. Stop loss at 136.50. You can see it on the chart. So what I'm banking on here is a run back up to at least these old highs. But if it breaks below that low, I'm going to come out of the trade. Let's put that on and see how that works. So I think that's quite interesting. I think if it breaks below that low, the risk is for a deeper sell-off. But for me, because the big trend is up, I'd still be looking to be a buyer of the Swiss franc against the yen. I mean, that's been sort of a barnstormer, hasn't it? What was it? 2020, May 2020, it was 110 and it touched 145. So we've seen a 30% move in a couple of years, the Swiss franc against the yen. Any comments on TSM? I've got no idea. Your TSM are? TSM? Doesn't look like we cover them. If you give me the stock name, I'll have a look again. Unless it's Taiwan Semiconductor. Is Taiwan Semiconductor? Don't know. If you can put the full name in. The Chuff against the DKK. God, this is an obscure one, isn't it? The Danish thingy. Is it Krona? I don't know. I think it is, isn't it? Yeah, the Danish. There you go. I would be... Again, I'd be a buyer. I mean, because we've broken out, haven't we? It's broken out. For me, the question is always stops. Where does the stop go? So for me, I think we've got a really good place for a stop there. The old highs, March highs, in a 7.5, broke 7.5, was support on the way up. So for me, I probably wouldn't be a buyer today. It'd be better for me if we got a bit of a deeper sell-off in this Swiss franc against the Danish. But looking to see if the old 7.5 level holds, and then a buyer. Because I don't know, I mean, these are multi-year highs up here. I'm not quite sure how multi. But for me, I'd be a buyer of the dip on that one. We looked at oil, copper. Let's have a look at copper. Did we do that copper trade? We did the copper trade. We did a copper trade on a live stream, didn't we? 22nd of July. Bought copper at 337. The market's 354 at the moment. There's any really big winners in here? Amazon's doing all right. Nasdaq. There's nothing that really stands out. Copper. Let's have a look at copper because it had that just persistent drop, didn't it? I quite like that trade actually. So we bought it whenever I said 22nd of July. I mean, I do still think it's a bit vulnerable, but you know, it just dropped almost pretty much every day. Not quite every day, but almost every day for a month, didn't it? I could be cautiously bullish on copper here, looking to see can it squeeze higher. It'd be interesting to see if it can break through 360. If it breaks 360, perhaps we get a bit of a move on. If I was a buyer now, I think I would still have my stop loss below that 15th of July high. 15th of July low is at 313. If I was a buyer now, I'd put my stop there. Maybe we'll see a bit of a recovery, but we are going against the trend for the year by being a buyer of that. So let's see. Let's see what happens. Let's have a look at some of the questions. We looked at natural gas. Dear Mr. Jones, I have a general question. Do traders need a professional certification? And if so, which one would you recommend? I think if you want to work for a bank, then you need to be, well, normally you need to be a graduate in something or other. If you want to trade for yourself, you just trade for yourself, don't you? And I think very few people have a professional qualification. The professional qualification I've got is the Society of Technical Analysts qualification, which is the official technical analysis qualification recognised in the UK and around the world. But I think bank traders normally have pretty good degrees, so I'd suggest looking at that sort of thing. Natural gas. NIO, the electric car company. Let's have a look at NIO. Let's have a look at that one. They were a bit bombed out, I remember, from memory, and they have been building, a bit of a base. Now, what would you say? The stock traded as high as 68 in January 2021. Again, I would argue it's always tempting, isn't it, when these stocks get absolutely bombed out. Went from 68 down to 12. I would argue, for me, that trend is still down. It's interesting that this year, in March and in May, it's sort of making a base above $12 or around $12. But I would still quite happily be patient. For me, I'd say the big trend is still down. Yes, it's absolutely stabilised over the last 6 months, but I would still be patient and see what happens. If we get a sell-off here, where does it stop? Does the old lows hold? So it's an interesting one, but I'd be in no hurry to buy myself because the trend is still down. We don't cover uranium, as far as I know. Let me have a quick look and see if that's changed. No, there's a global uranium ETF. We can have a look at that. If it just looks a bit, I don't know, a little bit crazy to me. What would you do? I suppose you could be a buyer with a stop under the lows, June and July lows, but then they're about, what are they? About 1760, but we don't cover uranium itself. Can we have a look at Euro Swiss franc? Yeah, we can have a look at that. Euro chuff. That euro has just been sliding steadily, hasn't it? I would be looking, the big trend looks like that, and then it's just fallen off a cliff since June. I would be looking to sell the euro against the Swiss franc, and I think I probably need to get down to the hourly chart to see it. I'd rather get a bit of a rally. I think if it rallied back into the sort of 98.50, 99 area, for me it looks like an interesting short. So that personally, that's what I would be doing because the big trend is still down. So I wouldn't be trying to pick the bottom. I'd be looking to sell a rally, but I'd rather see a bit more of a rally than what we're seeing at the moment. Rolls-Royce results were out this week and weren't very good. Fair enough. Thanks for that. Rolls-Royce and Aston Martin, some of the worst performing stocks. Yeah, I'd always keep an eye on Aston Martin, but it's been an absolute disaster. Aston Martin stock price So, yeah. Midterm elections are coming. What is your opinion for September and October? I've got to be honest with you, don't care about elections. I mean, clearly, US presidential election introduces some volatility, but midterms, I just trade whatever is happening in the market. So I do not have an opinion on that. Dividend favourite Vodafone. Didn't they? I was thinking about buying Vodafone a few months ago, and then they got a bit of a move on, didn't they? Because didn't somebody take a sizable stake from memory? Maybe it was here. Maybe it's still a buy there. I mean, it's again. I think Vodafone is a pretty boring stock, but as you say, it does pay. I'm not sure. Let me have a quick look what the dividend yield is on Vodafone. I'm going to guess it's about 4%, but I might be completely wrong on that. Let's have a quick look because I'd be quite interested in having a look at that. Vodafone yield 6.4%. It's a handy dividend yield, but it's a boring stock. But it's also at the bottom of its recent range. So there's an argument, I'd say, for being a buyer at the bottom of the range, near the lows for the year. Even if it was here in a year's time, you get 6% dividend. Don't expect it to set the world on fire anytime soon, though. Vodafone. So, yeah, it's quite an interesting investor stock. And the trend, the trend since March 2020. So that is quite interesting, actually. There we go. Thanks for that one, Bernard. Nestle. Let's have a look at Nestle. Let's have a look at those. Nestle, maker of chocolate and other stuff, drinks and milk. It's quite a controversial company, aren't they, Nestle? I think because of some of the, I might be wrong in this, so some of the breastfeeding stuff in Africa? I don't know. Anyway, but what's the trend look like on Nestle? Go back to 2018. Trend is up, isn't it? Trend is up on Nestle. I would rather be a buyer on a dip. If it dips down to the low 100s again, I think it looks interesting. So for me, I'd want to be a little bit patient on that, but absolutely cannot argue with that trend since June 2018. Fundamentals for the next few weeks. Don't do fundamentals, me. Do you see indices in correction? I mean, for me, it's just about, if we look at the NASDAQ, it's just how far the bounce has come, isn't it? And the NASDAQ is recovering today, recovering off that post, what am I trying to say? Payrolls low. But the trend for the NASDAQ is still down. I just wonder, will we see these indices under pressure? So we'll see. We'll see what happens. Dollar yen, we looked at dollar yen. Do you think Vail could be a buy? What is Vail? I seem to remember looking at these. Vail. I think it could be. I think if it's a bit of, for me, actually, what does it do? One of the world's biggest mining companies, blah, blah, blah. Okay. I think you could take the view it could absolutely be a speculative, what's that? Sorry. A speculative buy. We saw it dip down to $11. Is it in dollars? Yes, it's in dollars. $11 in November last year. Good run up to 21, nearly doubled. And we're back down, we're bobbling around here again. So again, let's do that. That's going to be our other trade of the day. We're going to be a buyer of Vail. We're going to put a stop loss at, 10. It's a wide stop loss, but the thing does swing around. Let's go $10 for a stop, and we'll risk £100 as usual, which is going to be not many stocks. 40. Yeah, we'll buy 40. Buying 40 at 13.01. Stop at 10. Seeing, can it build a base down here? Vail. Let's see. I think that's quite an interesting one. That the retest of an important low. Does it get a bit of a move on? Let's see. Let's see what happens. Dollar yen. We looked at dollar yen. We did look at dollar yen. Looking for the bounce back in dollar yen. Dollar Canada. Dollar Canada. A possible sell on the hourly. Let's have a look. So dollar Canada. Dollar Canadian dollar. Oh, I don't know if I'd sell that. So for me, it's quite a bit of a messy one, dollar Canada, but absolutely. We've got an uptrend on the dailies going back a year or so. Clearly spiked up. Let's have a look at the hourlies though. You mentioned the hourlies. Clearly spiked up on this payrolls thing, coming off a bit now. I would be now a buyer of the dip. That's what I would be. A buyer of the dip of dollar Canada. What's the low? What's the low for today? The low for yesterday is that is yesterday's low. So that is 128.17. So it's 100 points above that. I think that's quite interesting. If it sells off a bit more this afternoon and then stabilises, I would be a buyer of dollar, Canadian dollar. Let's see. Let's see what happens. But who knows? No one's got a crystal ball, have they? Look at that. Vacinis, a Brazilian miner. I don't think we cover that. I don't think we do. Oh, I don't know. Maybe we do. The Brazilian Stock Exchange, no. Do you think technical analysis works best on stocks or foreign exchange? It's a good question. I don't look at stocks much, individual stocks that much. I'd have stocks in my ISA and my pension that are dividend yielders, which is why stuff like Vodafone is interesting to me. That was flagged up. But I think there's absolutely no reason why it won't be the same on both. The thing with stocks, one of the reasons I don't trade stocks, broadly speaking, and it is a broad statement, they're going to move with the index, aren't they? So, because the NASDAQ has bounced back 20% over the last 6 or 7 or 8 weeks, that should have lifted a lot of tech stocks. So I think with individual stocks, there are so many of them, and I always feel when I look at those, I'm a little bit at the mercy of what the broader market's doing. So I'd rather look at the broader market. But there's absolutely no reason, if we look at something like, Apple, obviously, as we know, we have trends. There we go. We've got a little uptrend chugging along on Apple since those June lows in the NASDAQ. We have big long-term trends, support, resistance, all that sort of stuff. So, on the odd occasion I do trade stocks, absolutely do use technical analysis on them. But I think clearly you are at the mercy of the market. What percentage do you like to keep your margin at? I don't really think about it, to be honest. I use whatever leverage is available. I only risk, if you watch the videos, on the videos that we do during the week, I only risk losing £300 on a trade. The balance of this account at the moment is £18,000, so I'm risking losing less than 2% of my account balance on any one trade. Most people risk too much and end up blowing up their accounts. So for me, the risk on the trade is far more important about how much margin I've got tied up. At the moment, I've got a lot of open trades on this account. Relatively speaking, there's trades from the videos we do, trades from the live streams. There's quite a lot of trades, but I'm only using 4,300 margin. So, about 25% of my money is tied up on margin. That Swiss yen trade is doing well already. £7. Look at that. Brilliant. So yeah, for me, it's more about the risk rather than worrying too much about the percentage margin. Oh, Canadian, Richard H, you are a constant source of information on these live streams. So strong US payrolls, but bad Canadian payrolls. That's interesting. Thanks for that. I didn't even know the Canadians had payrolls. Shows how much I know. Stocks also have wide spreads. Have we had Ferexpo, whatever they're called? Miner, is it a miner? I'm thinking from memory. Let's have a look. Looks a bit bombed out to me. Let's have a look at that. Swiss-based international commodity mining, distribution, selling and trading business. Let's have a look at that. Now, I'd say the trend is still down here. So for me, it's another one that it could be interesting, but I'd want to be a little bit patient. You could make the argument that it was starting to break out of that downtrend. So I think for the more speculative inclined amongst us, there's an argument for trying to catch the start of a recovery and being a buyer at 143 where it's trading now, which I'm guessing, is that Swiss francs or is that euros? Oh, it's pounds. There you go. So being a buyer at £1.43 with a stop the other side of £1. Wide stop, obviously that is a big stop, but in percentage terms. But, it's fallen from a fiver. So the stock is down 60% since this time last year. So it's quite an interesting one, that, for an old turnaround. Let's have a look at the dividend. Let's see if I should be stuffing some of these in my SIP. What's the dividend look like on these ones? Hang on a second. 31%? Okay, that's historical dividend, I'm guessing. There might be a dodgy calculation there. They're not going to pay a 31% dividend, are they? Okay. Maybe we're seeing the start of a recovery. I'd still happier to stay a bit more patient on that. But it's quite an interesting one that the lows in March, given everything that markets have been through the last 5 months, the lows from March ahead of a pound held again. Let's see what happens. Would you trade before or after the London-New York opening? I.e., would you pick your time? Do you know what? Someone else asked me that question this week. I would, if I was trading the NASDAQ or the S&P, probably with the exception of today, like a payrolls day, I would wait for the official hours. So for me, I wouldn't normally look to do a trade on the NASDAQ or the S&P until after 2:30 UK time, when the market is open. I mean, today's a bit of an odd one because clearly, as we can see here, that would have worked well if you were trading the payrolls. Personally, I never trade the payrolls either. Always wait for things to settle down. I wonder if that's going to be a short this afternoon, after the bounce back. This is the S&P. So personally, I would just look at normal market hours. It is a 24-hour market. I'd look at normal market hours. Can you look at gold again? I can, but I'm going to say the same thing I said. The trend is down. Did a bigger video on gold yesterday, so watch that on the channel if you want to find out more about gold. But for me, the trend is down. I am short gold. I am happy to stay short gold here and see what I've got. My stop in place. Can't remember where the stop is. 1800 and something. But for me, looking to see if gold rolls over next week. If it doesn't roll over, then it doesn't get stopped out. FX. Thanks for that. So Ferex Pro has cancelled any future dividends, according to Michael. So that 31% dividend yield, as expected, completely spurious. So they're not paying out any more dividends in the future because they're not, or in the immediate future anyway, due to clearly being a tougher time for their business. I'm guessing. Someone saying Kip's Guitar is saying for dividend investing, look at Centamin, gold miner. Hang on a second. This has turned into quite the investment thing today, isn't it? Rather than the old trading. Let's have a quick. What's their yield then? Let me have a look on another screen. Centamin divvy yield is 7.7%. All right, 7% divvy yield, good yield. I mean, for me, trend is still down, so it's not one for me. I'd rather be a buyer of Vodafone than Centamin personally. But for me, trend in Centamin. Still down, but divvy yield of whatever I said it was, 7.7%. So there we go. Right, I think that's it, isn't it? We've done everything. So for me, next week and today, stocks. Stock market indices, all about stock market indices. Does it run out of steam up here? I would be leaning towards yes, it does run out of steam. I think it could be an interesting rest of the day in the US. Bounce back strongly from that payroll sell-off. Does it have the confidence to take out yesterday's high? If I had to do a trade on the S&P today, I could be tempted to be short the S&P, so I think that is an interesting one to watch. Dollar index, because we've had the move on the payrolls today, arguably overshot a bit, but I wonder if the moves we've seen the last couple of days on the dollar index mean that the dollar is reversing its recent correction, and gold, because the trend is still down. Right, that's it. We are done for the day. I'm away for 2 weeks now. So the next one is going to be 26. We're near the end of August. 26th of August is the next live stream. There will be some content going up on the channel. In the meantime, I've recorded a couple of educational videos, a couple of long-term outlooks for gold and oil. So they will be going up in the next couple of weeks when I'm away. Capital.com to find out more. David.jones.capital.com if you've got any questions. At Jones the Markets on Twitter. JonesTheMarkets.com to follow my Facebook page, and Capital.com on YouTube, Twitter and Facebook. That's it. Okay, enjoy the rest of your day. I think it should be an interesting day after that payrolls thingy. Today, that was the big shock today. Much better payrolls than expected. Let's see how stock markets finish the week. Have a good weekend, and we'll do it all in a couple of weeks' time. Okay, and if you're going away, I hope you all have a good holiday as well. But see you in a couple of weeks.